Guys, hello and welcome everyone. This is Big Bull here from Big Bull. Today we're gonna talk about supply and demand, and we're gonna learn how this stuff gets bought and sold in the market, and then why prices goes up and down. Again, it's going to be a fun ride. So let's get right dive into it and learn together. So guys, first thing first, supply and demand. First we will talk about the reasons, how I identify the supply, and then how do I take the trades, and then what my risk levels are, and then what are my targets, after I'm entering the trade. So let's just start from the really basics. Is what is supply and demand is, guys. So let's say prices from this coming down. It's where it's gonna go. It's gonna go to the next demand zone. It's not gonna stop anywhere. So our key goal is to identify the key reversal points in the past, so we can draw them on the right side, where we expect price to go up or down based on the zones that we draw. uh, just like taking example of the supply zone. Let's say price is going up, and then it started going down from this particular point, and then in the near future, I want price to dump from the same level. So what I would do is, I would instead of shorting anywhere in this level, I would wait for the price to go back to this zone, to take a short entry, the tide stops above the prior swing highs, and then ride the trend to the downside. Same with the demand zone. Guys, think of these zones. They act like a magnet to the price, right? So if there is a supply zone above, that means there are high chances price is gonna go or tag the supply zone before reversing, and then if there's a downside, and then let's say around here, this is the only demand zone here. That means there are high chances price is gonna go into this demand zone before we're gonna see any bounce in the price. So let's look at some of the examples. Not examples, but I'll show you guys in diagram how to identify a good supply zone or demand zone first. What you're going to look for is strong supply zones or strong demand zones. I'm just going to talk supply zones here, because I'll show you guys more examples of supply zones, because in the past 2-3 months, market respected supply zones better, because market is in a downtrend. So it's easier to identify supply zones than a demand zones, because the trend is clearly down on every time frame. So there are two types of demand zones. There are two types of zones. One is a strong zone, and then one is a weak zone. What I call strong zone is where you can quickly see the zone, and you would identify, all right, this is the level where there are more sellers and buyers are present in this zone, compared to the weak zone. And then how do you identify it? Is you're going to look at the price. Let's say price is going like this, going up, going lower, going higher, and then lower here, and then going higher again, going lower, made new highs, and then went sideways a little bit, and then made a new lows here. And then at this point, what would be my a good supply zone in this level? Because this would be my strong supply zone. The reason is because the sellers at these highs were strong enough that price made a new lows. That the seller was so strong in this level that they made a new lows, because they broke this prior lows here. They broke this prior lows. That means now the sellers at this one, they were not strong enough. They were not strong enough. So every time price was going back to this zone, the price is breaking out, because that was a weak supply zone. There was a pullback from this zone, but it was not strong enough pullback. So that's why it considered as a weak zone. That I would never trade that zone, because that zone never produced a new lows in the price. But this zone produces new lows in the price. So what I'm going to do is, I'm going to mark it, and I'm going to stretch it to the right side, and then in the future, if price goes back to this zone, which will 90% of the time, this is where I would take my short position as price goes up, with the stops at this prior swing highs expecting price to make a new lows, and just change the trend at lower lows and lower highs. I know some people out there, they trade a really wrong supply out there or demand. What they would say is, this is let's say a zone is forming, and then we saw a quick move up from that level, and then if price comes back to this level, this is the good demand zone or supply zone. But that is entirely not true. But then you need to look at that zone, if this is a good zone or strong zone, because that's what making these supply and demands more tradable, if it's a strong zone, right? So only this way you can tell if it's a strong zone or a strong base. Let's look at some of the examples here. When I'm talking about it, then it would make more sense for you guys to understand. Is something like, let's look at ES, is how I'm able to identify all these zones. Let's look at 1 hour again, guys. I'll tell you about time frame too, which time frame you need to identify those zones, right? Look at 2 hours here. Right here, so this one that I shot it recently. The reason that I was short is, again, I just want to add quick here is, most of the time I use the body only to use as a supply or demand. I barely use the wick. If the candle is really small, if the base is really small, then I will use the full body and the candle. But most of the time I only use the body. I ignore the wicks. Highs or lows, does not matter. But in this case, as you see, price did made a new highs. Let me clear all this up. If in this case, right here, price is making higher highs and higher lows here. And then what happened here is price made a new lows. Right here, the trend changed. That means that is a strong sell zone. The sellers are pretty strong in this zone. That's why they pushed the price lower. They broke this prior lows. So that means it was clear to me, if price goes back to this zone, again, this is a zone I'm going to stretch to the right side. This is where it started. This highs, that's the prior swing highs. I'm going to stretch the right side. So if price goes back, then I'm going to go short it again. What happened there is this zone acted as a magnet to price, and then price did go in this zone back here, and then rejected immediately in a smaller time frame. This is where we shorted here. Right here. I wasn't looking, but that was a pretty obvious shot at this moment. But I will show you where I took short positions into using the same exact setup. You see how price came to this zone, immediately rejected, and started making lower lows and lower highs in a smaller time frame. And then that's why I was so bearish today, that we got rejected by a higher time frame, a strong supply zone, and then the price was making lower highs, and then we pulled out our webs, and then it also rejected by the golden zone at the same point. Let me show you guys a more example using 2 hours time frame here. There is this one, I guess I shorted this one right here. Any highs you pick, guys, any highs right now, is looking at this one. This one I did short. Price was making clear highs here, and then the trend changed. You see the trend changed. Prior lows broken. That means this is a good supply zone right here. This is a good supply zone. Anytime the price is going back to this zone, I'm gonna go short it again. And what happened is price did gap up in that zone, and then we shorted it. And then look, price gapped up in this zone again. After the sell-off end of the day, and price gapped up in this zone and shorted it. I shorted after hours, and then price did made a new lows, and then and kept going lower and lower. Now that's the way you can identify a zone. I'll look for one or two more examples for you guys. so you guys have it clear. Like this one, I shorted this one too, right here from this zone, this 2 hour zone. Price was making this lower highs and made a lows here, and that means price, the sellers here at these levels, they were pretty strong. They pushed the price lower to the new lows, and they broke the prior lows. That means that's a pretty strong supply zone. I'm gonna take it, stretch it to the right side. And if price comes back to this zone again, I'm gonna go short. Look what happened. This zone price came back. It's gonna act as a magnet to price. It's gonna attract the price toward itself, and then it did, and then we saw a huge dump in price, going to the downside. Again, guys, these levels, they either happen in strong zones. They build either at the highs. They can also be built in the middle of the trend too. So let's say it doesn't have to be always at the highs like here. They can always build somewhere in the trend too, as the price is going down. What do you mean by that is, you guys probably see most of the time is as price is going down, price takes a break. It goes sideways, and then it forms some zone here or sideways action, and then it dumps again to the downside. So this zone where price took a break, that is also can be a strong supply zone if this move is producing another lows in price, breaking prior lows or already established lows here. We'll show you guys a couple more examples in this one too. Like this one, this one you need a little bit more practice to identify or to trade, because this is, I would say, more advanced level to trade. But if you're trading the swing highs and swing lows, this is much easier to trade. But over time, as more trading more and more supply and demand, you will like see identifying these zones, it'd be much easier to trade. Like this one, price took a stop, went sideways and then formed this base and dumped. And what happened, this price came back to this zone here, rejected and came back down, and also formed another supply zone right here. So let's say if price came back to this zone again on 2 hours on last week, I guess, and this is where I shorted last week on Friday, that because I knew the price was in the supply zone. It's a strong supply zone. Price went sideways after this huge dump and then made another lows and then breaking this prior lows too. That means there are high chances if price goes back to this zone, we can see another dump. So now the trend is clearly changed on 2 hours, on the daily or 4 hours too. Price started making this lower highs and lower lows again. Price did made a new lows today, so I expect this selling to continue, and formed another daily, probably daily supply is formed. Yes, daily supply is formed right around here, right? So again, you can identify supply and demand zones in any time frame, but your main goal is to have a smaller zone, so you can trade in using that zone. So let's say you are sometimes the most the traders struggle with, let's say they draw this zone, but let's say it's a 5 point or say 20 point zone is a big zone, but they don't know where to take that trade, so they take that trade early on, and then it in the end it does work out, but the risk is too big. First they get stopped out and the market dumps later on, or same with the demand here. So now we're going to look at how you can take your entries using this demand zones once you clearly identifying that it's a strong zone. Guys, so far any questions on that supply zone, do let me know. I'm just probably moving a little bit faster, but do let me know if you guys feel like you're stuck somewhere. The way you're gonna take an entry or identifying a good supply zone is, let's say now you identified a good supply zone or demand zone. or you stretch to the right and then you go on a smaller time frame. Now let's say this is a SPY zone identified in a 2 hours, then I'm going to go in a smaller time frame, then I'm going to try to shrink it, by using those 15 or an hourly time frame to make it a little bit smaller. So I would have to wait a little bit more for price to go into that zone and then trade based off that zone with the stop loss at the prior highs, or the prior wick highs of that particular zone. So we'll take the example of this 2 hours, that we traded this last here, this one right here, this zone we'll talk about, and we'll take it to the right side. Price came to this zone and then rejected immediately. How would I know that price was gonna go on dump of this zone? Again, guys, it's simple, very simple. Again, two types, two ways you can take the trade using the SPY zone. The first one is using a fake out method. The first is a fake out method. It's pretty easy. Is, let's say price is going up. This is a resistance here. This is a resistance, and price moved higher, and price is already in the SPY zone, and then we saw immediate rejection. Price did, it would be something like this. Price made a highs and then it rejected, and then it breaks out into the SPY zone, and then it's immediately rejected and it's closing below the prior highs. It's closing the prior high. This is your confirmation that the fake out is there. The SPY is gonna work. So I'm gonna go ahead and short in this SPY zone on that retest of the prior highs, and then price is going down. So that's how I would trade a fake out as a first method. Right here, the prior highs were formed and the price tried to break out of this level, couldn't break out, retested it, and then I'm going to go short on this one. So if you are not comfortable playing this method, then what you can do is then you can wait for a structure change, which we talked about in the week 2 class, which is a higher highs and higher lows in a smaller time frame. Let's say you're looking at hourly SPY zone or 2-hour SPY zone or a daily SPY zone, and you draw it out, and then you go in a smaller time frame, but there's no need to go short as soon as the price enters the SPY zone. You can enter the trade when the trend changes in a smaller time frame, like in this one. Price was forming a clear uptrend here, clear uptrend, and then as soon as price is breaking below this prior low, there's a clear trend change, and then that's also suggesting a massive a red candle on some volume too, probably, right, on some heavy volume. That is also your sign that a heavy volume rejection in the SPY zone. That means the trend is changed. I need to go short in this zone here, and then look what happened. Price rejected, and they're on the retest of this prior lows here. That's lower highs, higher highs, and then price made a lower lows. That's a clear structure change you can see, and then take the entry with the stop loss at these prior highs. So that's why most of the time I post my alerts. You guys, you can see me saying that the structure is changed, price in SPY, structure is changed, now my stop loss at the prior highs. So now with this one, now once you wait for the structure change in the SPY zone, then it's pretty obvious that the prior highs would be a stop loss, because if that stop loss is protected, there are high chances we're gonna keep dumping. If that stop loss, if price is breaking above that stop loss, that means the trend is still intact, that I need to be a little bit I need to wait a little bit more for that SPY zone to work out. Maybe it's not as strong as a SPY zone, so maybe price need to spend a little bit more time to absorb that before dumping. But if it's a good strong SPY zone, the way I tell you guys to identify it, then I would say 90% of the time price would give a immediate reaction of that zone, right? So I want you guys to have a focus on that. The first part, where the first type is price at the swing highs and swing low. That's the type 1. This is, and then the type 2 is in the middle. This is going to take time, so you need to practice more. But this one, you can identify right off the bat. You go out and after this class, on any time frame, you will start seeing these zones. I will show you guys more of these zones. Let's say I'm trading daily zones. How would I trade a daily supply zone? Because that's going to be a big zone. But how would I go ahead and trade it? Is pretty simple. Now this is a supply zone, formed already. So anytime price is coming back to this zone, it's an easy shot, right? And now let's see what happened in the past. Yes, so this was a good supply zone right here. The reason is price at the highs, and then we got a nice sell-off of this zone, almost 100-point sell-off of this zone, and then and this was the highs, prior swing highs. I'm going to just take the body, and the price goes back into this supply zone. High chances we're gonna keep dumping to the lows here. And then now let's go in a smaller time frame then to see how I would have traded it. Price is clearly forming higher highs and higher lows, clearly forming these higher highs and higher lows. And this is where it broke the trend the first time. Trend broke the first time, and look what happened. This prior highs, two ways you can take an entry. The first one is a fake out. The second one is a break for a wait for the trend change. And in this scenario, the both things happened. This prior highs, fake out happened. Price closed below this prior resistance level. This is where I would take my entry for the shorts. And then with the target of this prior lows, or as long as the trend is holding up. And look what happened. The trend changed, the fake out happened at the same time, giving me a dual confirmation that there are very, very high chances that price is going to dump from this level. And then you incorporate the patterns too. The head and shoulder pattern is breaking down. So that was a clear sell coming, and then we saw a waterfall coming out of this daily price. And because again, guys, the bigger the zone is, the bigger the move is gonna be. If you are drawing the daily zone, that means the move is gonna be bigger. If you are trading a 50-minute zone, that means the move is gonna be a smaller comparing to the daily zone. So it just really depends on which zone you are drawing. So this one was the daily zone, and then we saw a complete collapse here from this daily zone. If I'm trading 50-minute, maybe there was not gonna be a much bigger of a move. And looking at 30 minutes, I just saw, I think, another supply zone here. Yes, guys, again, really good supply zone formed. Price made a highs, price made news, price made highs, and then formed another lows here, breaking this prior lows. That means price, took a break on, and then stretched to the right side. And then this is going to act as a magnet. Price going back to this zone here again. This is where I would take my short entry again, targeting new lows here, and then price did make new lows. And then this I already explained to you guys in the 2-hour supply zone how price this zone made a new lows, went back, and then dumped again. And then now let's go back to daily chart and see why prices keep dumping on a daily time frame, and then why I'm so bearish in the markets. On every single pump, is why is every single pump is getting sold, and then why it was not happening from this prior year March lows to this July highs or August highs. Right, the answer is pretty simple. Look at the daily structure. Right, price was clearly making this higher highs and higher lows, so there was no reason to go short on in the markets for a longer frame. And then but this changed right here, and when price made a new lows here, and then on the weekly time frame the structure changed. So there was no reason to be bullish on the market unless that changes again. So now let's say next week price is breaking above this highs, which is 44.30 on ES. Then I would say, all right, daily structure is changing, Now, these supply zones might work. These might work, but it's not going to be as strong as the prior ones, because the daily structure is changed. We can see small pullback, but price can pull back, go back up again, just like this one right here. There was a small pullback right here. This was a zone. This was a zone here, and then price pulled back here in this zone. We got a nice sell, but price failed to break this prior low. This was the prior lows, where price took a break, and then price failed to break the lows and then made new highs. That means this was a clear demand zone, a good demand zone, this one. So what I'm going to do is I'm going to mark this level in the bottom, and I'm going to stretch to the right side. Look what happened here is this price came here the first time, and we got a big bounce off this level of this demand zone. So that was a quality demand zone, because this was a fresh zone. It got never tagged first, and then price did made new highs after making the lows here. Price came here and then made a new highs, formed here, and then made another new high. So this is where the move started after the sell-off. So that's a strong zone. And then what happened is, so that's why I was not bearish around mid-August after the OPEX. I was like, there are very high chances that we can see the upside. And then I was just on the sidelines, and this is what happened. Price went to the upside, and then it got rejected again, around this zone where I found a supply zone in a smaller time frame, and then price dumped again, right? And then the reason price is dumping, got a bounce of this level, is also if you guys remember, I made a post on Friday or Wednesday, I guess, that the bottom is in, and then the price ripped almost 170 points off the lows. The reason was is because I identified as demand zone on the left side right here. This is a level where this move started from the upside and then broke this prior high. It was a very strong demand zone, and then this is a huge sell-off coming into this demand zone. Very high chances this sell-off was gonna get a push into the demand zone. Price just cannot go straight down. It has to go up, and then it can go down, and then probably the trend is gonna change. So there's a huge sell-off into this demand zone, and then you will see, if you guys look at the volume, analyze it. As soon as the price is going to enter a supply zone, or as soon as the price is going to enter a demand zone, you will see a big spike in the volume that we already discussed in the volume, I think day 5. In the day 5, you can incorporate that with the supply and demand. You see where the most volume is coming in. If you have a strong zone, the volume will come 100% every single time, right? So if you're using supply and demand with volume, it will definitely work 100% of the time. That's the reason I have very low number of losses. The reason is I identify those zones strong and supply and demand zones, so I know where to take profits, where to take my entries, and then where to take my exits. So in this level, all the pre-members knows we did not short the market at all. We waited, and then even in this zone we're not shorting the market. But right now, going ahead, I'm gonna go short the market on every single pop. I showed you why the daily structure is changed, supply is formed. So and now it gave me a green light to go ahead and short it, because now I can clearly see the supply zones are being formed on an hourly time frames. So that was pretty obvious. We got the bounce, and then a clear rejection clear rejection now for this one. I showed you why this rejection too, going to the highs, going to the lows, this retracement. Guys, again, you combine all these things, the Fib retracements, supply and demand, support and resistance, candlestick patterns, volume. Once you combine all this, once you get a good grasp of all these things, then it'd be very it'd be very hard for the markets to beat you in the end. So let's look at some volume too in the supplies, in the demand zones. Look at the spikes every single time. I'm going to show you. Look, this is the demand zone right here. Look at the spike in the volume right here. Look at the volume spike. Price was going down on a low volume. Low volume, price is going down. But as soon as you enter the demand, what's going to happen? That's a clear indication that the big money is buying in the demand. And then same thing, goes with the supply zone. If as soon as see a spike in the supply zone, that means big money, it's definitely selling in the supply zone. So now let's look at some 2 hour time frame to see. Now let's look at SPY would be more clear in this terms here. Like this one, that's a clear supply on 4 hours right here. Price was going lower, and this is a base formed, made a new lows, trend changed, came back to this supply zone. What happened? This trend change, price went into this supply zone, and then look at the volume spike right here, huge volume spike, and on that dump, huge volume spike, and then the price went to the downside, right? And then right here at the bottom, price formed a demand here. This was a demand formed going to the right. Why this was a good demand zone? Because price got a bounce and then trend changed, made a new lows. If you go on a smaller time frame, you can clearly see 30 minute goes, price was making lower highs, lower lows, and then price started making higher lows and higher highs. And then what happened is it formed a demand on 2 hours. Right here we got a push. We got a push where? We got a push into the supply zone right here. That's what the supply zone formed right here. We got a push in the supply zone, and we gapped down in this zone, and then pushed back up because that was the zone produced a big move for the upside, and then we pushed higher and higher. You see, guys, you would find these strong zones on every single time frame. Again, you all you need to do is identify it on a bigger time frame, and then go in a smaller time frame to make a little bit more smaller, and then trade once that once your the price hits that zone here. And then how you take the entry? The first thing is you look for a fake out. Second, you would look for a structure change. Third can be you look for a bearish pattern here, or a bearish candlestick pattern, like here in SPY. This one formed a shooting star, and then a prior rejection here, a supply on an ES, that was a clear supply on ES, formed a shooting star. That's a clear indication that market was going to keep going down on this one. And someone would say this was a good demand zone. Yeah, it was definitely a good demand zone, but look what happened. As soon as price came to this demand zone today, this was a prior demand right here, because this move formed a new highs in price right here. Price made a highs, lows, and then made new highs here. So that was clearly a good zone to take the trade for the long side. And then price did go higher, and then we got a big move, almost a $2 move of this demand zone, and then price moved higher. But this was not a strong push by the bulls, and then price instantly came back. Again, what I said before, the smaller the demand zone gonna be, the smaller the move is gonna be. The bigger the zone, the higher the time frame zone is gonna be, the bigger the move is gonna be. And then now let's talk about how to place your exits on your trades. Now you know how to identify a zone. Now you know how to take the trades in a zone, and how would you take the exit. How where would you put the stop loss? It's pretty simple. Putting a stop loss is, if you are trading a change of structure, right? If you're trading a change of structure, then it's obvious. The prior highs that formed, as price starting to making lower highs or lower lows, the prior highs is definitely gonna be your stop loss in that case. But if you are trading as soon as a price is going to the supply zone, and then you just want to take that trade right away, and that that's a valid zone because your instincts telling you, or you have been seeing long you seeing this trading supplies supply zones or demands for a long time, then you probably get an idea that this is going to dump. But at that point, where would you put your stop loss at that point? So let's say this is the zone that I'm trading. This is the supply zone I'm trading, and then this is the base that is inside that supply zone, right? So price tags it. This is something like this. It's gonna be this base inside. Most likely, only uh, do the bodies, right? So this is the body, and we have this wick here. This wick. Most of the time, I would place my stops at high of the wick, which will give me enough room for my trade to work out, and then as price coming here, and then coming start to go down. So most of the time I identify the body as my supply zone, and then the wick high is probably going to be my stop loss 100% of the time, because at this point, guys, I do not wait. Personally, I'm going to tell you, I do not wait for the price to make lower lows and lower highs. As soon as price enters my supply zone, I take the trade. That's why you guys see me sniping tops and bottoms every other day. Generally speaking, how long is valid supply and demand zone for? Is it after it tagged one time? The thing is, I only trade it for one time. I do not trade it on the second time, because the thing is, think of the same example I'm going to tell you, as a support and resistance. Support is going, resistance is going to work one time. Think of it like as a cardboard box. The more times you're going to punch it, the high chance is that it's going to break one time. So I'm only gonna trade one time, and then if price made a new lows. So guys, again, what's going to happen is you don't want to trade the same zones the second time price coming to that zone, because now the initial move is already happened. That means, let's say if the open orders that was there, those who couldn't short the first time, that means the open orders are there. That's why it's a fresh zone. The price is going back to the zone, and the open sell orders are getting filled, and the price is getting dumped. And then now if it's going there third time, which is obviously going to be the open orders are getting filled. Now it's just, it can be a trap, or price can just chop around this zone and then can push higher. At this point, how would I draw my zones is, you would find something like this. At this point, it'd be very easy to identify. Really good questions here on this one is, price is going down, made new highs, made new lows. Price, what's happening to this God here. So price generally moves like this, if it's in a downtrend. So this is where you initially shorted the price. Obviously, somewhere around here you shorted the price, and that's why it came into this zone here, in the demand, in the supply zone. This is where initially shorted the price, came into this, because this zone, because these sellers produced a new lows in price. My bad. That means every time if price is gonna go to this zone here, we're gonna go short it. But if it's going, where would I short it again? The second time the scenario is gonna be the same, but our level is gonna be changed. Our zone's gonna change. Where is gonna be? We're gonna look for where the second move is started again, and where it started. This is where the new move is started. This is where price made a highs, and then price made a new lows here. That means instead of focusing on this prior zone, I'm going to focus on a new zone which produced a new low. So now this was a zone which produced a new low. So now if price is going back to this zone in the future, this is where I'm going to go take a short entry, the stop loss at this prior highs, or anywhere the way that I told you guys about, right? So that's how I would trade it. I can show you examples on this one too. Let's go to ES, 2 hours. This one, guys, really good one example here, in just one in one frame, is price made a lows here, made a highs, and then made a lows here. Wait a second. This supply zone formed a sell, produced a sell here, right here, and then at this point I don't know where to short it, because price already formed a supply zone here. And then so I wouldn't go short here, because there is no zone on the right side, or maybe I'll just place support and resistance at this point, but there is no supply and demand here in this level. Now it formed a supply, it goes back into the supply zone, I'm going to go short it. But going further, this is not a valid supply zone anymore because price already dumped, this supply zone already worked, and then price made a new lows. Now I'm just going to use this supply zone next time price is coming back to this zone. So now this made a new low, so now going forward this supply zone is no longer valid for me. You know which supply zone I'm going to use. I'm going to use the next one. So this is where the initial move started, so I'm going to use this supply zone. I'm going to mark it from just the body, and then I'm going to skip go to the right side. And so if let's say price is coming back to this zone anytime in the future, this is where I would take the shorts again, not around here. And then if price is breaking above this one, what do you see? There's no supply zone in this zone, which is the where the price is gonna go. If this level is breached, that means the price is instantly gonna go to this supply zone. There's nothing in between. That means we're gonna get a big push to the upside to this demand zone, this supply zone above us. Makes sense? Do you wait for the candle close after the wick or the price just to touch the stop? Guys, generally is if I'm trading options or supply, because the thing is with the supply and demand is I do not generally wait for the candle close. I only wait when I'm trading support and resistance, because the thing is the idea of trading supply and demand is you are basically expecting price to not to make any highs, right? To not to change the structure, right? If price, let's say wash my throat, guys. Now let's say this is the supply zone right here. This is a supply zone, and this is a supply zone high, or this is a wick high. You can say, or I would say it's a little bit lower here. This is a wick high, and this is the body that we identified, and then we got a dump of this level. It's going back there again. So now this is my strict stop. That my hard stop level. So that means is price is this is where the move started, and then as long as this high is a protect, that means price is in a bearish structure. Price is making lower highs and lower lows, and I expect price to make lower highs here. That is breaking this prior highs, prior lows. But if price is going into this supply zone and then starts breaking out, or not even breaking, if just wicking it at this point, that means the buyers are strong in this zone here, this zone where the move started. The buyers are strong, and this supply is a weak supply, and they are breaking out above, even though it's a wick or it's just a candle close above. If it's a candle close above, that's a very high chances that I'm not gonna look for a shorts anymore. I'm only look for a pullback to buy, or I will look for this another supply zone up here to go short if price goes there. Because the thing is, if it's wicking higher, that means the buyers are strong, the structure is changed. Instead of lower highs, price starting making higher highs. At that point I would be completely out of that trade. Because the thing is, if you're trading daily time frame, you cannot wait for the daily candle to close above that zone. You would, if you're trading options, you would just lose all the theta on your contracts. Or same with the ES, right? Because you cannot have a 10 point 20 point risk on your futures trade. Why don't price bounce off supply ES 44.30 on the daily when it's coming down? Let's skip the demand zone. When? Today? Let me know. Send the chart in the chat. I'll look. On in the 2 hours. In the 2 hour. On the daily. $44.34. Again, guys, Also, one thing, the price, I get your question is price doesn't have to follow the supply and demand zone again. So that's why we have the rules to wait for the change of structure as soon as price enters the zone. So then you have the confirmation of entering into a trade. I'll also a lot of failed examples here, which did not work out is could be. This was not a good one. Like this one, right? Like this was a good supply zone right here. Price made a highs right here, and then price made a lows here, and then but instead what happened? Price just straight went above it, and then the structure didn't change on a smaller time frame. If we go look in a smaller time frame, that was a really good strong zone. But if you see price went straight past it. At that point, I would even look for a short at this point. Why that's a clear zone. Price started a new lows here, but the trend didn't change in a smaller time frame, so there's no point at this point. It skipped the demand zone on this one. Okay, we'll see why. This one price didn't come fully to the demand zone right here. That's what you mean. Now let's look at a smaller time frame. What was going on. So that was the prior highs. Okay. So this is where the price bounced in 2 hours. Guys, in this case, this was a clear demand zone, but we would also have to incorporate this prior highs and prior lows, which is a support and resistance, that we learned in a week on the day one, right here. The price was respecting the support zones at this point. You have to use this support and resistance to again, guys, I'm telling you, nothing's gonna be perfect. You would find a flaws in the supply and demand zones in everywhere. I cannot have full examples which is gonna work out all the time. But again, you need to tweak it according to your according to a scenario that is currently going in. So let's say if at that point the support is working, I'm gonna go ahead and play the support. If at that point, if let's say price was gonna go into demand zone, I was gonna go long, right? But at this point, if sometimes I do not even take that trade. You see, I'm like I'm gonna go short in that time frame, but price never goes in that same. And then what do I say? I do not chase it. I just sit back. I was like, all right, I'm gonna wait for the next trade, right? So sometimes you're gonna miss the trades. Price not always gonna come to these zones. That's why you always guys. That's where the patience comes in. That's where the patience comes in, because you need to practice that. So if my rule is I'm only gonna take a trade when price comes into the zone, I'm only gonna take a trade then. That's why you guys see me a lot of times missing the trade. Even that's why I think I did not short this highs here on the other day. These highs I did not short, because I was expecting price to make a new highs around here, around something like this, and a fake out, and then coming back off this supply zone here, right? But that never happened, so I just sat on my hands and I didn't do anything. Again, you need to make those rules for yourself, where you're going to take the trade or where you're not. One good trade is definitely good enough comparing to a 5 or 7 bad ones. Guys, any questions you guys have on this one on supply and demand zone? I try to explain it again, as always, in a very simple manner to the mentorship students. I will explain it in a, in a very deep. There are 4 types. You can you can identify those zones. I definitely need 5 to 7 hours to explain all those rules, but I would explain that inside the mentorship that is starting next week. Again, if you guys are interested in the mentorship, the link is in the announcement. You can go ahead and sign up for that, and then it is starting on November 6th, where I will be going I'm going thoroughly in supply and demand, agitated waves, support and resistance, and volume. How you can trade volume, everything in depth. With almost of 2 to 4 hours of each class every single day. Where you can learn a lot. If you are especially if you are a beginner. So if you are considering it, please do sign up because we are starting in just under 3 weeks. Again, guys, I just want to put it out there. If you, I already told this to my premium this morning. If you have someone with a small account and still want to get into a mentorship, and then hit me up, a DM or open a ticket. Support will help you to get a little bit cheaper price if you have a small account to get the mentorship. So I don't want anyone to wait another year if you just really want to get into the mentorship. So back to the topic, supply and demand. Pretty easy to trade, guys. Pretty easy to identify those zones. If you guys, still very unclear about it, ask questions, tomorrow in the live or in the DM. I'll be happy to help or happy to explain those everything. Cause the video is gonna be up, probably in an hour or two. So you guys can rewatch it later and then back test it on every single time frame, and then chart it on every single chart out there. So over time, probably in a month, 2 or 3, you'll get more experience in drawing those zones and then taking the trade in those zones. Because in the end, guys, it does not matter the stock. It does not matter if you're trading Apple, if you're trading Apple or SPY or Qs or any penny stock or any forex market, does not matter. As long as you are following these rules when drawing supply and demand zones, there are very high chances that trades will work out the way I showed you, because that's the way I trade. All these the past week or two, I've been showing you guys all the different strategies, all the different tricks, how to get in, how to get out, how to choose your targets, because that's how I use in my daily trading. And then in my recaps, you guys see this thing happening too. If I can do it, you guys can do it too. All you need is practice every single day to become more confident in your setups and in your trades. All right, guys, hope you guys learned something new today. Again, thank you again for joining. The recording will be up soon, and then I'll catch you guys tomorrow in the live trading. Have a good day, everyone.